Well, hello everybody. Welcome to another Pepperstone Learn It Live webinar series. Today we're going to be talking about advanced Forex day trading strategies, really getting involved in the charting today, talking about the top-down approach, talking about the way that we break down a trade from start to finish, where you want to put things like stop losses, take profits from a technical base, and really just trying to break down, I guess, some of the more advanced techniques. Now, we will be during today's session, I guess, exploring advanced stuff. So there will be a little bit more of an assumption that you do know a little bit about support resistance, price action, those types of things. But as always, it's going to be a great session. And yes, this will be recorded. It'll be on Pepperstone's YouTube channel. My name's Thomas Atkinson from FX Evolution. As always, I'm joined by Tyron Abella. How are you going, Ty?
Good, thank you. Yeah, looking forward to talking about the advanced strategy. It's nice when we can actually delve deeper into what we actually look at as traders on an everyday level and actually passing that on to you. So yeah, definitely looking forward to getting into this one with some market moves, pretty prominent at the moment on some of the majors.
Absolutely, Ty. There's some actually good trading going on in Forex and, of course, some commodities at the moment as well throughout the platforms. So this information today will be contained in this video or webinar is generic in nature and for educational purposes only. As always, the information will not take into account your personal objectives, financial situation, or needs. This information is not to be construed as an offer, recommendation, or solicitation to buy, sell, or to participate in any particular trading strategy and should not be considered investment advice. So Tyrone, as we always say, Telegram group, Telegram group, Telegram group, Pepperstone's Telegram group. If you're not in there, if you don't have Telegram, go download it. It's completely free. It's a great platform. We'll share the link with you now in the chat. And of course, basically what Pepperstone does is every day it gives you snippets of information so that you don't have to go around and view all the websites. They can precisely bring it together into like a top 5 or a top 10 of whatever's going on that day. We definitely recommend that you check that out. Also, Pepperstone's YouTube channel and our YouTube channel as well, FX Evolution and Pepperstone, great to check out. And we also have a Discord community alongside for ourselves. So you're welcome to get involved in the public Discord community there as well. So what are we going to be covering today, Ty? Well, there's a few things. Number one, advanced FX day trading strategies, breaking it down as we said. Then we're going to be doing some live chart analysis on MetaTrader 5 itself, some key scalping entry points and indicators that can go along with our day trade, because realistically, what is day trading? The idea is you're in and out, ideally in a day. Now, I think it all blurs lines sometimes a little bit with traders. Like scalpers will say some people will be on 1 minute, some people will be on 5 minutes, some people will be on 15-minute charts. Really what you're trying to do is you're trying to find highly statistically likely opportunities. And to do that, one of the ways we can do it is, of course, by breaking it down from the top down. And sometimes you're going to see a day trade that might morph a little bit into a swing trade. Isn't that right, Ty?
Absolutely, yeah, and really combining strategies is key to advanced techniques. So we'll be definitely looking at some of that, and you're really showing it's all right to talk about a strategy, but really you have to overlay it with all of the things that we talk about all the time at an advanced level. And yeah, definitely multi-time frame analysis and confirmation is one of those very key aspects that we'll talk about tonight.
Another thing, Tyrone, if people have questions today, please feel free to ask them throughout the session. Obviously, we'll answer them as we can if they pertain to what we're talking about, or we'll have a little bit of time at the end for any questions you might have to ask about FX trading, commodities, or really anything else that Pepperstone offers. We're pretty well versed in everything over the years. Been doing this for quite a long time now. So we love your questions, because whatever you've got to ask, usually there's another 100, 200,000 people out there that have a very similar one. So no matter what type of trader you are, we always say you've got to watch out for news events. This one here is a news calendar, economic calendar. And I think there's a mixture of problems here, Ty. People sometimes think that every bit of economic news matters. In the FX world, it depends on the type of time frame you're on. Now, as a day trader, we will generally be on probably around a 1 hour down to 15-minute time frame, and 4 hour will also be something we're looking at, as well as daily. So usually 1 hour, 15 minutes is kind of like your jam and the time frames that you'll be on. Now, you may have slight alterations to this, but usually it's somewhere around here. A bit of yellow news is not going to affect you as much, neither is orange as much as a red piece of news. But then also all red newses are not equal. Often GDP numbers are not as important as people think when they come out because they're often quite well known, whereas something like a press conference from the RBNZ or Fed Chair Powell speaking, a lot more movements will occur. So yeah, it really depends on what I guess you're trying to do and what time frame you're on. Which trading pairs are best? And we always have this slide up here, but even for advanced techniques, it's really good to think about it. The bigger the currency you're trading, the more likely it is to actually act very technically and be less susceptible, let's say, to political kind of events as well. Like if we're trading, let's say, the euro, US dollar yen, pound, US dollar, they're usually fairly stable. They're very technical. And okay, you have things like Brexit, which happened, of course, with the pound, and that was a massive political event. But in general terms, Ty, it's a lot more stable than trading some other currencies, isn't it? I think he may have dropped on us, so we'll be back in 1 second. So anyway, look, yeah, that's the way I kind of look at it. That's the way we look at it here. So we need to decide what type of trader we want to be. Let's say we're going to be a day trader in this case, and then we want to trade the times or figure out the times that we want to be trading. Now, if you live in Australia, if you live in Europe or somewhere around there, basically what will happen is it's all going to be down to this concept of what time frame is going to be best for you. For an Australian, it may be after hours. So after the 9 to 5 grind, you come home, you want to do a little bit of trading. Is the European session going to be best for you? Most likely. Somewhere around that London Open is actually going to be what you want to target. And you need to get in there about 30 minutes before. And we'll explain the deep dive of why you need to get in there about 30 minutes before. It's very, very important we do that. By the way, can I just check? We've had a few people on the web platform having some problems with sound. Could you please just let me know that you can hear us clearly? And if you can, just message us in the comment section right now. We just want to make sure that this is not only recorded, but it's going well live. Times to trade for, it's working? Yeah, I think it is.
I believe it is. Yeah, I believe it is, yes.
Yeah. So what I really want to do is I want to talk about this top-down approach, and I want to actually get into the charts straight away. So let's do that right now. Let's get into the charts, and we're going to start a little bit differently here. We're actually going to start by talking about gold. Now, of course, today's session is on Forex majors, but the same application will apply here for gold as it would for FX majors. It's just something that's played out very well recently. And I want to explain a series of very common patterns that occurs. And this same thing will happen whether it's a Forex currency, whether it's a commodity or a stock index or anything like that. And that is the double bottom pattern. And I think a lot of you probably see this in hindsight, but we've obviously been talking about it a long time here through the webinars and been following gold for quite some time. There's actually a lot of trades to break down here for a day trader. And I think it's a great starting point for the top-down analysis. So firstly, we're going to go to the weekly. Now, you should always start around a weekly or a monthly, shouldn't you, Ty? Because this gives us a great top-down idea of what's going on in the market and some key points that we need to be watching. What are your thoughts on that, Ty?
Yeah, 100%. And you can see here, even with the trend line that we've got drawn, that launch off that trend line, that last move, that big move, actually, you saw the double bottom there. You can see the big giant rejection pin candle, hammer candle, call it whatever you want. That gave us all the information we need to know that the power was going to be long on gold. And we've been talking about this for weeks and weeks and weeks, haven't we, Thomas? Like it's been literally pretty much from when that double bottom formed, we've been excited about this trade. And I know a lot of our communities got involved in this. I know a lot of you out there have actually been involved in it as well. But we want to highlight it because this is what we're looking for. And this is why a lot of people say, well, why would you look at a weekly chart when you're going to be effectively scalping? But this is why, because it gives you the absolute bias of the direction of where the real momentum is. It's all about actually moving with the trend, the prevailing trend that is, very, very important. And it really opens up the power and you can see how much power was actually involved in that move.
So let's break this down from a top-down perspective, Ty. First up, we see the support. And we know that somewhere around this level here, this 16 kind of 80 zone, we're going to interact with a trend line that's been through a weekly. We're going to interact with previous resistance, previous support, and we don't know at this point. All right, maybe one of you out there knows and you're smarter than us, but most people will not know at this point that the falling knife is over. You don't want to necessarily be buying the whole way here. You'd ideally be selling into this market for many valid reasons. But let's talk about the turnaround story from a day trader perspective. Why do we look at weekly? Because once we understand a bigger pattern is in play, we then have a bias, as Tyrone said, and then we can jump into the daily, the 1 hour, the 4 hour, and trade that bias and trade the swings within that bias. Incredibly powerful stuff, and it gives us really solid take profit zones to look at. So firstly, what we had here was we had a rejection, and then as is common with double bottoms on some time frame, you might get what this did here, which was a very strong pin or hammer bar on a weekly chart. Now, this is showing us that momentum was coming back into the market, and the market could not wait to get buy prices down here. Now, they bought it up so quickly that they created this pin bar or rejection, and that's what's the power of this candle. It's when it comes off key levels of support resistance, it's showing us there's a panic. There's effectively a FOMO before the FOMO really ensures, and that's, of course, the fear of missing out down here at this level. So let's now go down to a daily, more where we'd probably be generally looking at for a day trader. You might have a look at this chart. There are some key characteristics here to this trade that I think an advanced trader will want to break down. The first one is before we actually break through the double bottom and verify that this is a trade that's in play, we actually get consolidation. And this is a really important thing. What this tells us is that the market is effectively moved up heavily. It's then consolidated just below. And then, of course, we get our candle that moves above both moving averages here, the 20 exponential and the 50 exponential. These two levels are very, very important always. But on top of that, when we close above, both of those will then act as dynamic support. Also, the coiling shows that all the indicators are resetting and that the market is incredibly keen to get through this point because effectively there are sellers here, but each seller is being met by buyer demand very quickly. It's not like it's a 2 steps forward, 1 step back. It's like 3 steps forward, half a step back. I think that's probably the best way to put it. We get the closure out, that signals the first buy. And then, of course, day trader, if we're looking at this, what are we going to be focusing on? As soon as I see that closure above here, Ty, what's the thing that we would love to have happen for a double bottom pattern?
Yeah, absolutely. The retest of the neckline from above is absolutely spectacular. And if you did miss that first one, that is the conservative entry. There are 3 entries here, really. You had the aggressive entry on the double bottom, you had the conservative entry, and then you had the very, very conservative entry, which is the retest. That is absolutely golden. And I know, and you have to be aware of it. You have to be waiting for it. But savvy traders who are really looking for these patterns would have their alerts set all day long at that retest, because probably 8 times out of 10 that is going to happen. And when it does happen, it's even stronger than the initial pattern break.
Yeah, it's usually really strong, and it's got all that dynamic support coming in from the 2 moving averages as well. So it's a great pickup zone. And this is where you want to break down in your time frames. You want to start saying, okay, I've seen that breakout close on the daily. Is there some day trades in here that I could be looking at? See that rejection comes through. Let's have a look at this on a 1 hour chart and see what it looks like. We'll scroll through back into here. You see that strong rejection that comes through? Now you'll notice that there's a huge amount of support that's actually through this 1 hour chart. See that again? Now we go down to a 15-minute chart and we go through and we go scrolling back. And again, pretty damn good support that comes through there with that big rejection that comes up. So there's a lot of day trades that can happen here. One of them is something like this. You get that big rejection and then you get the consolidation here. Now, what a day trader is going to do is they're going to have a bias long. So at this point, we're going to be biased long. We're going to be looking for purchases. And effectively, we need to now find, are there some reasons for us to take some long positions? So what we have here on the 15-minute chart is we've got a series of lower highs coming through, but we have very equal support zones. What's important is a lot of people are going to say, Tom, Tyrone, that is a descending triangle. That's the way I'm looking at this. But remember, we have a bias towards the upside. Now, an advanced technique on something like this is actually to understand that a descending triangle or an ascending triangle, once they're broken against, because effectively it's a trend line on the way down on the top side here, that's just as strong a trade as the trade that goes through here and then completes back at the support. Once this candle happens and snaps off this. In sequence, what we have is we've got a new peak, and that new peak is broken through this series of lower highs, which gives us an instant signal, hey, we've got a day trade here, and it's a really good one. Now, it may seem like, wow, you're breaking down a huge amount. I don't need to go that complicated, but this is actually a really simplified concept. Remember, what we've done is we've gone weekly to daily. We've got bias towards upside. We've seen an upside break, and because we have bias towards the upside, we know it's going to be more likely to be successful. And there's a great trade here because where's our stop loss going to be, Ty? It's going to be underneath this last wick. So we get an entry in here, we put a stop loss under here, and we could at least have up here, if not even more, because we have that bias towards the next support resistance lines. And the rest is history. You can see how powerful that initial move was. It goes straight back into the highs over here. That could be the day trade that we're looking for. And in essence, what we do is at that point, we start to say, okay, we believe that there's a lot more in this. We already thought that there was a double bottom on the higher time frame. So we get this distance and we extrapolate that out. And that distance there takes us to the next zone. So we're going to be biased long all the way up to this 1836 area. And therefore, we've got not only a target over the longer term, but we've got a bias for our day trades to be long up until this point. How powerful is that, Ty?
Oh, it's amazing, and really, and that's the idea. Knowing the bias and really understanding what the market's trying to tell you. Like, you would be mad to be trying to short this market, right? Look at the shorting opportunities there. Very, very small, very, very minimal. If you didn't get your entry and exit absolutely spot on, you would have been taken out, no question. The long opportunities far outweigh the shorting opportunities in this particular trade. And a lot of that's coming from the setup. So it's really, really important to understand this. And this has come from the weekly straight up. So although we're trading on the daily and the 4-hour charts and even on the 1-hour charts, we know where our bias is. And the prevailing trend is the most important trend to be with. So really, really important. And a lot of you are probably thinking, well, and that's just one example. That's gold. But look, this happens all the time in every single
more in this one. Don't worry.
Yeah, all the time. Like, we see these all the time. And when you know what you're looking for and you start to understand the nuances of the market, you'll start to see them too. And then you'll realize how much easier it is to actually trade in the direction of that prevailing trend. That's not just a rookie beginner method. Trading with the trend is all about really keeping yourself consistent and actually giving yourself the best opportunity every single time you trade.
Well, it goes even more steps than that. Now, you'll notice that we had that 1825, 1835 take profit zone for the double bottom to complete. But then we get the pullback. Now, we may not be in the pullback, but we still have bias towards the upside. There might be a little double bottom that occurs here on the 15-minute chart that we can take into the resistance again. Then other trades that we start to get as well, as we think about that weekly and you think, wow, that's a huge rejection. We saw that trend line getting bashed off as well. We have a triple, quadruple top up here with a huge amount of resistance, or 1, 2, 3, 4. And then that starts to make us think, well, what if we get a breakout above this level? Will that also present a day trading opportunity? And I believe it really did here. And the day trading opportunity, whether you took the aggressive or the more conservative kind of pullback, went to the 1870 kind of zone, the 1875. That is what they call the participation phase in markets. Now, did it go a bit higher than that? Yes. But if you could snavel the point from here all the way to here and have a stop loss that may only need to be behind the 20 moving average or behind the last lows in the smaller time frame, it's a very, very successful kind of style. We've seen it again recently. The 1872 becomes our resistance. Then we're still biased long at this point, and we're looking for the next zone. Where's the next breakout? A very interesting point for gold. It happened literally today. We basically saw this 1888 area get closed above. Now, why did I use 1888? These 8s just tend to work very, very well in the gold trade right now. 8's a very powerful kind of number as well in Asia, and there's a lot of Asian demographic that trades gold, and you need to be aware that actually it's a thing now. These 8 numbers, there's often take profits or supports around those zones. So even if the market comes back down here now, what have we analyzed in this 4-hour chart? We've analyzed that the 20 moving average, this red line here, has been phenomenal buying pressure. If the market comes back down, We think it could go to the 1930 based on, of course, the technical analysis support resistance levels that we're looking at on the larger timeframes. We've got 1930, we've got 1960 as well. We have a 20 exponential that's being found here. And I guess what Ty and I are trying to talk to you about here today is that the advanced technique is going through the timeframes, understanding that we are in an uptrend fundamentally on the higher timeframes, giving yourself a bias that isn't based on anything other than price action, really, and the fact that you're seeing continuous follow through on that price action, which means you're following the big money, and effectively you are waiting for key levels to be broken, or you're waiting for things to continuously show themselves as recurring events, such as this 20 exponential. And once you see that, you can then find candles inside your method or your double bottoms on your 15-minute charts or your ascending triangles or whatever else you might be looking at, your indicators themselves, and you can start to plug away at having a day trading strategy with this stuff. How powerful is that stuff, Ty? It just really is.
Yeah, the 20 moving average is just so sexy. We talk about it all the time, and it's the go-to because it's the mean reversion. MA, we know this. Look at those rejection candles, those last touches, like far out.
These
like
ones especially.
that's just really buyers and sellers absolutely telling you what's going to happen. It's so clear. And again, we could show you 1,000 examples in the next 10 minutes of how this works nearly every time without fail. And look, all it is really, do you take every 20 moving average touch? Of course not. But when you understand where the trend is going, that's when you start to look for these. And this is what it's all about. When we do our normal webinars and we're just talking about the basics, we talk about the 20 moving average as the go-to moving average. But to really add a big part of important trading to your toolbox, understanding which way the prevailing trend is going and then looking for those opportunities, then using the 20 as your confirmation is really where it gets exciting, because it just lifts your average of strike rate wins just phenomenally. You'll be amazed at how much different it will be when you are actually trading with a lot more than just a 20 moving average behind you. We don't ignore it, but we add it to our arsenal, and I think that's the important part.
All right, Ty. Well, I guess that this is just one example, as you mentioned, but let's go over now, because this is a deep dive. Remember, we're trying to get in the idea or the mindset of this powerful kind of technique. Let's have a quick look here at the US dollar index. Now, we're back to Forex, where we should be. I know, guys. We were meant to be here all day, but I thought that gold is just a perfect place to start. And look, the reality is most people that trade a little bit of major Forex, Ty, they usually dabble in the gold sometimes. I'm sure anyone out there dabble in the golds as well as Forex? Let me know in the chat right now. I'm sure there is someone out there, Ty. So here's the trend line going down here on the US dollar. And we follow the US dollar index because it gives us a really good metric to whether the US dollar is weak or the US dollar is strong. So this is, again, a bit of a top-down analysis. We're on a 4-hour here, so maybe a little bit high time frame for a day trader. But what is immediately clear is that we're in overall downtrend. We've also seen some big movements recently towards weakness in the US dollar. So if we break down and we think about where we are and we think about where we could be in the future, let's just quickly go out. Let's go out here a little bit. See how on the weekly, we've got some serious next level supports, and we've also got some serious drop-offs that could occur on the US dollar. It's actually been very weak for quite some time. So if we think about this from a trend line perspective, and we're trading around this level here, at least coming through this point, what is this looking like right now? We break this down and we start to say, okay, well, there's clearly some bulls and bears having a fight here, aren't they, Ty? They're unsure of where they want to take it next, but the pressure was always towards the downside up until this point, wasn't it?
Yeah, that's right. And it's identifying the war, and when the war starts, I think that's probably the important part of really isolating these key important zones. I mean, even though we've got the circle drawn here, we knew the battleground was actually drawn well before this, because you can see that the line at 89.65 has 3 very, very important touches there. So we knew that this battleground was already drawn. All that's happening here is the buyers and sellers are actually interacting with each other, knowing that this is the ground where they have to either put up or shut up, or actually going to fall through the floor. So we already know this. This is not a surprise that price is actually interacting this way here. This has been set up by the 3 previous touches. So it's really, really important to understand those zones.
So we came into last week and we actually had some really easy I think some really good analysis that we could have done here on the 4 hour. Firstly, Tyrone mentions the 3 touches. Then we think about this and we go, okay, at this stage, we have a support, we have a resistance, we're getting close to that point, and we have a trend line coming through. Let's say we close, let's just say a hypothetical scenario. We got a giant candle that closed through here. In essence, that would be putting a double bottom in play and change the game completely change everything that we're thinking about the US dollar. And at this key critical point, you need to be able to spot that. That's the top-down analysis technique. If that had happened, what are we doing? We're breaking the downtrend. We're creating a double bottom pattern, which we know is the end of the trend and the start of the new trend. It's like chess, guys. That's how we're playing it here. And then it goes through, and then we expect it to interact from the top down into the trend line, find buying pressure, and then resume an uptrend. So it's actually the reason we bought gold in, because it's a very similar concept that could have been happening here. Now, it didn't happen and it started weakening. But what we do is we analyze on the US dollar index, and then we break that down and we bring it across to the euro US dollar. In fact, let's go here to the euro US dollar. If you go back a few weeks ago and you have a look at Pepperstone's YouTube, you'll see us talking about this particular pair, and you'll also see us talking about this particular support zone. See how this could have easily been a double top for the euro. It wasn't. It rejected on the smaller time frames. Again, where the day trade is going to be, resistance becomes support, which is, of course, role reversal, and you get an excellent little trade up into the peaks up here. Now we're at a very similar time.
Absolutely, and I think that's 100%. That is a really, really important aspect of what the Euro USD has done recently, because a lot of people look at that, and a novice trader would look at that and say, oh, that's a double top, let's trade it. But anybody who knows a little bit about what's going on and understands support and resistance and role reversal zones knows that this neckline is going to be extraordinarily difficult to break because of the previous resistance there. So it's not just a standard double top, it's because it's got a neckline that has to break a serious level of what was previously resistance to actually do it. So that makes it it makes it very, very difficult to actually make that pattern work out. So most of the time we wouldn't even attempt that unless we had a very clear break of that zone. So we're already on alert that that is not a double top that we're going to be really entertaining. And again, like Thomas said, the one that's setting up at the moment is very, very similar. So you got to be very, very careful. You've got to absolutely understand your zones. Very, very important. I'm going to just actually, while we've got this, I'm going to just answer a couple of very quick questions, because a lot of them are around the similar line. We use 3 moving averages. The red one is a 20 EMA, the blue one is a 50 EMA, and the green one is a 200 SMA. Now we use these moving averages on every time frame we look at. We use them for scalping and we use them for long-term directions. We do not change our MAs ever. Okay, we're always using the same ones. So and the reason for that is because we know exactly what they are, what they're doing, what they represent, and all of them have a very important meaning. So we like to stick to the standard, and we've done so for many, many years. Another question, we actually had a request to remove the navigator. Now, we generally have the navigator on our screen when we are trading, just for interest for you, is so we can actually keep an eye on the ticks. With the navigator, we can actually see the market watch, and you can see a lot of the ticks happening in real time. So if anything starts to move very, very quickly, we can actually see it in real time, and that's why we have that open while we're trading. So just for a point of difference, just so you know, that's why we like to have the market watch window open while we're actually looking at the markets, because it gives us a bit of a heads up, if you like, if the market starts to move really, really quickly.
So we've got up here, Ty, that key critical zone that's coming in at the moment on the euro. Now, this is a zone where if you were to say, what's your bias right now, you would have to think still uptrend. In fact, if you'd gone negative on this for quite a period of time, ever since really the pandemic started, you'd be relatively wrong. The thing is, though, we don't want to deal with uncertainty, and we don't want to deal with just a bias. We need that extra advantage, and that extra advantage is going to come from us dialing down into the smaller time frames and understanding the current market dynamics. Now, if we believe this is like a triple bottom right now, and we believe there's a resistance up here, what happens if we close above this resistance? we theoretically go back into the resistance up here, and then we might even go to a new high based on the current trend. So it's really more about understanding if we are finding support here. Often in Forex, we get that opportunity to wait for the confirmation. It's kind of like just over here. It's a very similar technique than was used on gold. What you had was you had a very critical support line. You had a multiple series of resistances that were coming through with lower highs. See how it's the same thing, a closure out, a retest stop hunt. No doubt that's a giant stop hunt candle, which your stop losses either under here or under here would be safe from, because of course you don't want to get wicked, which is what that is. That's a nasty stop hunt, don't get me wrong. And then it keeps moving up in the direction of the trend. So it's about understanding you don't want to catch the falling knife even in the direction of the trend. You want to look at the smaller time frames, such as the 15-minute, great day trading area, and then look and understand these series of lower peaks, the closure above those lower peaks, and that usually if you're a patient beaver, you will get the second entry. Okay, you'll usually get the second entry. Sometimes you don't, you got to move on to the next one. Now, Euro was only one example of recent movements, but if we go over here to the pound, you'll notice again, the pound's actually been a very, very strong currency. And I bring this up because day traders should have been here as well. Resistance, 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 resistance. I don't know how much more resistance we want. Again, we've talked about this for, I think, probably 5 weeks, 6 weeks, Ty, in terms of on the webinars here at Pepperstone. We've just talked about this resistance level, how it's such a critical zone. We saw a black breakout, and again, there is a retest here, allowing day traders to come in and hopefully spot opportunities in the smaller time frames. You're not going to be trading necessarily every day. But remember, this is only 2 pairs or 3 pairs. There's other pairs to be looking at. We've outlined those quite a few times.
100%.
It's powerful stuff.
Yeah, and you only have to trade a couple of times and get it correct each week to be a very, very profitable trader, don't forget. It's not about how many trades you place. It's about how many quality ones you actually get in. I'm just going to answer another very quick question we've got here. Bella has asked us what are our comments on the ADX indicator. ADX indicator, we don't use, Bella. Look, and it's not that it doesn't work or it's not that it can be useful, but we only use indicators and only talk about indicators and teach indicators that we actually use in the real world. To us, understanding what the indicator does and applying it to the correct market is actually far more important than any indicator information can give you. You need to understand it. And the ADX is useful, but we find that in the context of how we trade, which is actually predominantly price action, it's not as useful to us as the indicators that we actually do and show on these webinars. Okay, so it's not that it doesn't work, it's just that we don't really use it as part of our method.
Ty, US dollar yen, one of your favorites last couple of weeks. What are your thoughts about the current daily and how this thing is getting trapped between 2 moving averages, our favorites? It's coiling up, isn't it?
It is, and look, when we find a stock or an indice or a currency starting to coil like this in between 2 very, very important zones, it really does act like a bit of a spring. Okay, so you can imagine in the olden days, I'm probably showing my age a little bit now, but we used to have these things called slinkies. And they were like a big giant spring, and you kind of squash them together, and then they open up like a worm and they go up and down stairs. That's a little bit like what the market does. Yeah, well, that's what the market does when it's coiling in between these 2 zones. It starts to get trapped, and it's almost like a coiled spring getting tighter and tighter and tighter. And then when it does eventually breaks out, it breaks out with a momentum that is generally quite a bit stronger, and usually at least the equal of how the market entered into that coiling process. So we really keep an eye on that sort of thing. We get excited by this because when we see this, we know, okay, it's going to limit our trading opportunities in the short term, but it could give us a really, really good one, opportunity up or down when it does eventually break. So they're definitely one to watch. But you can see here, the 2 moving averages that we're talking about are completely trapping the price, also coupled with a very strong support zone and a reasonable amount of resistance above it as well. A very, very strong coil happening that could lead to a really nice move. So you set your alerts around these levels, and these are the things you need to look out for.
All right, so the coil here is happening. Then we go down to the 4-hour and we can see that it's starting. It's kind of got like a series of, I guess you would say, like equal kind of points, but basically we have some very strong resistance. Now we close above this resistance, all of a sudden, as Tyron said, that coil could present. We can go down to the smaller time frames. We can find things within our system. We have a bias at that point, either to the upside or the downside. Notice here on the daily, what have we not had recently, Ty? No closure underneath the 108.60. If we get a closure underneath the 108.60, that could mean serious downside here, and the coil is sprung to the downside, the backward slinky. So if we have, well, I guess the slinky doesn't really, it's technically the way the slinky should go, because the slinky ain't climbing those stairs, I don't think, unless it's a motorized one. So we'll go with the correct slinky versus the backward slinky, which is the breakup. Yeah, it's good stuff. And again, it's a similar technique and an advanced technique of understanding these two moving averages on the daily. Once they're broken above, you will see it quite a few times. It's a coiling based structure. In fact, I have one that I can bring up very, very soon. And I think it's set to, is it Zag? I think it might be this, but it might be the, I think it might be a different time frame, might be the 8 hour. But basically this is Zag is silver, and you can see the resistance up here. Different time frame, I don't have my charts, but I do know it was there. And it's breaking out at this point. So $28, clearly a resistance level, unable to close through, it's pulling back. There's always going to be ways that you can kind of interpret these charts, and you need to break down whether you believe it's going to break to the next level. Of course, it's at a critical level when you think about it over the longer term. Again, top-down analysis, and of course, you should do your own research on this stuff. So we'll get back into the charts here, Ty, or the slides for a second, and just go through some more concepts. So we've talked about the top-down approach. What we didn't do in that advanced technique was actually go line, bar, candle. We just don't have time today to go through why. But never just use candle charts. Line charts are actually the best for drawing support resistance, and it's a great way of proofing a pattern, okay? So if you're looking at an inverse head and shoulders pattern, something that looks like this, and you can go, well, we've drawn it on a line chart like this. Now, if it looks clean on a line chart, what does that mean? Well, a line chart is the closure price. So the closure price is a very important level. If we get the closure price and it looks the exact same way, so it actually has this inverse head and shoulders look to it with the line, it means it's formed more correctly. And of course, the higher the time frame it's formed on, the better it is. We talk about price action all the time. We won't go into that. But in terms of day trading strategies, you've got a channel breakout strategy. We mentioned 30 minutes to 1 hour before London market open. What some people do is they get all of the trade session from New York close to London open. They will then create a support and resistance line above and below and look for breakouts from that form if it makes sense to also, a heavy resistance. So what I mean by that is, let's say you had New York closes down here. During the Asian session, the market comes up like this, breaks down. Market session comes up like this, breaks down. Then it comes up again, and we're half an hour before London open, and then we see a closure that goes out. Now, of course, there's always a chance of a false breakout through this point. But if you see something like this and your trend bias is already to the upside, is that going to be a fairly strong concept, Ty?
Oh, most definitely. Yeah, you're definitely looking at, look, when you see that, you've got to be aware of your surroundings, of course. Like, if you've got very, very heavy resistance on top of that, you want to be making sure that it's a decent time frame that it's actually doing it on. But when it does eventually get that break, you don't want to be too anxious, but don't forget what we said earlier. The retest of that level from above can be just as powerful as the initial break. So, yeah, most definitely. We talked about it earlier, but yeah, when you do break a roll reversal zone and it's testing it from above, that's what basically a channel breakout strategy is, okay? So you got the top of the channel, it breaks out, comes back and tests the top of the channel, continues on with the longer term trend. Happy days. Love it.
And ideally, someone said, what confirmation you're looking for? If you can get, let's say, a breakout, comes back down, retests, you've got moving average here, maybe even two moving average, and then you get an engulfing candle. That's the type of candle, that's the type of pattern that we're looking for. Engulfing candle off a point of previous resistance, off the roll reversal, off the pullback, in a breakout. It's beautiful. It's bellissimo, yeah, Ty, when you get that kind of thing. So it's the way we want to be doing it. It's the way we want to be doing it. And it's bringing together, as we would say, 3 to 4 reasons.
The
Yeah.
pressing system gives you all these reasons, like, and we'll touch on that in a second. But yeah, most definitely, when we use the pressing system to give us those confirmations, you're generally getting about 3 or 4 at least before to get a reasonable score, and it forces you to do it. So this is an exact example of what we're talking about right here.
Imagine if you're getting in golf here, you've got 2 moving averages off the breakout, beautiful. And you know, of course, where you're going to go, which is the direction of the full channel pattern. So a lot of people do that type of strategy. A lot of people, of course, look at something like that gold one. We do encourage, go back, have a look at that, look at the structure. And if you can bring that into your already existing system, bring in creating a bias in the higher time frames, it can definitely help your day trading strategy. Double bottoms, double tops, all of the normal chart patterns that we talk about. Think a little bit outside the box on these. It's not about the pattern itself. It's about the psychology of the market in that area. Remember, what's an inverse head and shoulders telling us? It's a trough, a lower trough, and then, of course, a change. We've got a peak. We've got a higher trough, which is already a change showing bullish momentum. And effectively, when it breaks the neckline, a higher peak. This is a change of trend. That's all it is.
Important lightning bolt. It's the lightning bolt. We call that the lightning bolt effect. And the lightning bolt is probably the most important term there is in trading, in my opinion. We believe in it so strongly because it tells you everything you need to know about the market. Absolutely, it does. Price action is king, and the lightning bolt is basically what price is really telling us what it's going to do. Is very, very important.
All right, so the other thing that we've got here, things like the 1, 2, 3 trading style, if we have lightning bolts coming back down, so we've got 1, 2, 3, 4 resistance, we get a breakout and then little lightning bolt off that level. That's, again, as Tyrone said, very, very strong. It's a good little understanding of key levels. Now, someone also said, what do you wait for? Well, you wait for confirmation breaks. What's a confirmation break? A closure on the period or the time frame that you find the pattern or you find the support resistance the strongest, which is the one that's going to show you the verification. And I don't want to see people going on a 5-minute chart when they're looking at a daily candle waiting for a confirmation and they're like, I'm in, it's all good. And then they go, oh, wait, that wasn't that. The next day it fully reverses and destroys them. It's the time period that you see the pattern on. Very important.
Yeah. Absolutely. I'm going to answer a couple of questions. What we've got, we're going to touch on a couple of these moving averages as well. We'll quickly do that, and then we'll explain a couple of very quick concepts.
Oh, basically, Ty, just the 20, 50, 200. These are some of these slides we've used quite a few times. Do we use stochastic? Yes. Do we use MACD? Yes. Do we use RSI? Yes. We're not going to go through those ones. I think today was all about breaking down the top-down concept, breaking down that gold, breaking down that US dollar index, that euro, that pound, and showing that it's the same kind of concepts, and it's really just understanding those. So Ty, look, as always, we want to help people out from Pepperstone, and of course, we actually have the launch of our brand new website to announce today as well. So you can jump on over to fxevolution.com. I've put a link in the room if you're interested, and if you use the code HODL, HODL capitals, you'll actually save 50% off. And this thing covers everything. Like we're talking.
This is the biggest masterclass we've ever done. It basically covers the stock. It covers everything, including the pressing system. And because it is our launch day, lucky for all of the new Pepperstone people who haven't actually done it, the first 2 people who actually register for the course are going to get a 1-hour training session with myself or Thomas. So only for the first 2 people who come in, because it's our very, we haven't launched a new website in about 6 years, and this is the one with a brand new masterclass. So getting quick, it's for the first 2, and we'll be announcing those people next week. And also you'll be getting an email. So HODL is the code, and you will be thoroughly impressed, I'm sure, with the new website and the content. But also, just on a housekeeping note, aside from the Telegram group that Pepperstone run that you must be a part of, there's no excuse not to be. You must be. It's free. It tells you all the information you need to know all the time. You really need to do it. At the end of this webinar, we're going to have a survey for you. Please fill it out. Just take a moment or two to fill it out and give us the information, give us the feedback that you need, because we want to really bring as much information and content to you as possible. I know tonight has been very, very popular. I've had about 1,000 questions, which is awesome. The engagement is great. So I'm assuming a lot of people want the advanced techniques, which is great. I'll put that into the survey so Pepperstone know, and we can program a lot more of these, okay? So just take a moment or two to really help us out so we can bring you the best content possible, and really try and enlighten you all with how we go about our trading and what we do.
Yeah, so I've posted in the room just a couple of things. I'll post in Pepperstone's link for the Telegram. I've also put in the Discord community that I showed there. That is everything. So basically the Discord community, usually like a public member will get access to this top section, which is awesome. We share a lot of stuff in there. And then of course a private member gets it all. So that's the currency, the crypto, the commodities, all the rooms. Look, we've been around for a while. We've got a great community. We'd love to see you guys in there. So I'll answer some of these questions as well, Ty, that have come through. You've had plenty of them that you've answered. Indicators used for scalping, thank you, says Robert. Yeah, I mean, basically with indicators that are used for scalping, we would say things like moving averages can be used. Of course, stochastic, MACD, very common. RSI as well as a good one. Some people also like the VWAP indicator, which you can find out more about online. I think eventually we'll cover that on these webinars based on how much feedback we get on them. And pivots is also a common one. So quite a lot of people like pivots as well. We have done a PowerPoint. I think we've done a presentation on that as well. All right, what else is it? Some questions about some large contracts.
Yeah, Ichimoku as an indicator for entries. Look, you know what? Again, it's a little bit like the ADX. Does it work? Yes, it certainly does, but it doesn't really filter through with our trading technique or style. So it kind of it gives us a bit of a convoluted view. We're not saying it doesn't work. It just we don't use it because it doesn't really fit in with the way we approach the market. But in its own right, it certainly does work. So yeah, there's nothing wrong with it. But you've got to be pretty on it, and you've got to use it a lot to really understand it. Someone has also asked, can you have $100 million in your account? Sure. I can't see why you can't have $100 million in your account, and I'm pretty sure that Tarquin from Pepperstone will probably shout you a lunch as well. I'm sure he'll take you out to lunch if you put in $100 million in your account. But look, it doesn't matter how much you've got in your account, it's about how much you're risking, okay? So it doesn't really, when it comes to volume, it's all about how much you're risking. You've really got to make the right risk management decisions when you're placing a trade, whether you've got $100 in your account or if you've got 100 million. That's the most important part of trading. And even all the things that we've talked about tonight, they will pale into insignificance when it comes to risk management. That is the most important aspect. Don't you worry about that. So if you haven't got that down pat, it doesn't matter how good a trader you are, okay? So you really have to, focus on the risk management component, no matter how big your account is.
All right, Ty. Well, I think it's probably good to just announce you can come on over to our next webinar, which is going to be, our private webinar will be hosted once weekly. If you jump on into the Discord community, I'll pop the link in there again. Firstly, here's the Telegram one for Pepperstone, and there's our one. If you jump on in there, you can get the link, and we'll be doing that very shortly. But as always, Ty, it's a great week. Hopefully you guys enjoyed this, and it is recorded. It's going to be on Pepperstone's YouTube channel tomorrow for you guys to view.
Absolutely. Yeah, check it out on the YouTube channel. They're always recorded, and if you've missed anything from the past, you can go through and watch a back catalogue of them as well. We go through a lot of different information in those, so certainly give those a look out. Look, thank you so much for all of your questions tonight and being part of the presentation. We've really enjoyed bringing it to you. We look forward to seeing you in the next couple of weeks or in the next 10 minutes if you're coming to our webinar. So thanks very much, and we will talk to you very soon.
All right, thank you very much, everybody. And remember, there's a survey at the end if you feel like filling that out. Helps us get more information from you about what you like to see, and we can tailor it to you. That's the great thing about Pepper. They're always listening to what you, the traders, want. Talk to you in 2 weeks or very soon. Catch you, everyone.